Now, if you've watched my previous videos, you notice that I only trade GU and gold. So for those that are not familiar with trading, GU is the British pound against the dollar, also called a cable, or gold, which is XAU USD. Now, normally I'm a scalper and an intraday trader, so I tend to use the razor 1 minute. As you can see, I've got a 1 minute there, and then I've got the 15 minutes. This is a recap for GJ. So I don't usually trade pound Japanese yen. However, I thought I would get some videos out using the signal on other pairs so people can see. And for those of you that try to trade other pairs, I mean, if you subscribe to it, then you can maybe try using that. Now, this is not financial advice in any way. It's for educational purposes, and also me showing you every trade that the signal triggers. Now, I'm not going to cherry pick, so I haven't been cherry picking for the past, I'll say, month since I started doing YouTube videos, because I'm very new to recording. So pardon me if I make a few mistakes or ums and arms, but I'm getting used to it. But I said I've been using indicators for years. I've set them up and I've been trading with them for years, almost 10 years. But took it really serious around 2019. I've got the Edge and I've got the Frisx razor. These seem to be very effective and profitable. So I've been using myself to trade. Getting back to the point, I'm self-recording this video for just testing it on GJ, which is the Japanese pound against the Japanese yen, which seems to be quite a trendy pair. This is more of a reversal signal, the Frisx razor, whereas the Edge is more of a trendy signal. So that works very well with trendy pairs. However, this seems to work here as well. Now, with the sort of GU and other pairs, I tend to set it up, the signal up on a 1-to-1 risk-reward ratio. On the 15 minutes, tend to be 50 pips stop loss and 50 pips TP. However, with the trendy sort of print pairs, gold and GJ, which is this particular pair that we're on here, pound Japanese yen, I tend to set it up a 2-to-1 risk-reward ratio, which means I've set it up as a 50 pip stop loss to gain 100 pip, because they do tend to move quite a bit. Now, also another key feature of this indicator is that it's got a built-in risk management sort of tool where I can set it to 2 or 3 or 1, but I tend to leave at 3. So if the as you can see, maximum consecutive losses before daily stop, which means if it hits 3 losses consecutively, then it would not trigger any more signals until the next trading session, which is a good risk management feature I've got in place, so it protects you. Now, these settings I can get into later on, but I'm not going to get into it now. Now, basically, it's set to a 1-to-2 risk reward at the moment. So every loss is 50 pips minus, and every gain is plus 100 pips. So we're going to start now. I can only go back as far as December 1st, because I'm that far back. I'm going to go back, do a bit of a back test so that you can see for yourselves. I said no cherry picking. I'm going to show you the losses, and I know I've worked it out, and I know what the losses are and what the gains are. And there are 12 losses and 12 gains. However, I want to mention, so the 3 losses out of the 12 losses, I would not call a loss if I was trading it in real world trading. Now, for the purpose of this video, as I said, I'm not cherry picking it at all. So for the purpose of this video, I'm going to show you all the losses and the wins. I'm going to count the losses as a loss. But if I was trading that, those 3 trades, those 3 signals would not have been losses if I was trading it myself. Okay, and that's where experience comes, and that's why I teach in my classes, my 1-to-1 classes, or a small group sometimes I have, how to be consistent with your trading and make consistent profits anyway. But for the purpose of this video, again, this is just for the Frisx razor indicator. Let's crack on. So we had a signal on the 9th of December 2025. That was a sell signal, triggered, went to build a drawdown, and then hit TP a few days later. So again, this signal is for people that maybe work full time, or swing traders. You know, sometimes we open and close in a day, within hours, sometimes go for days, but again, it works, it suits people. But again, but this opened on a Tuesday and closed on the Friday. That is a week. That was 100 pips. Now this one here opened on the Monday and closed on the Wednesday, 100 pips again. So that's two positive trades already. Had another signal on the Friday, the 19th December, but it hit stop loss. So that was a loss, straightforward loss. Then you have another buy on the 31st of December. That triggered and hit stop loss the same day. So that was a good one. And that was 100 pips. So far for December, that was 300 minus 50. Hold on a second. Yeah, 300 minus 50. That's 250 pips for December. So that's not bad at all. Now we have got January here. January had a first sale trigger, which went into a bit of profit. Now, what I tend to do is I've always got this rule where take advantage of the market. When the market presents to you, you take your profit. You don't leave money on the table. So if I open a trade or a signal appeared and it goes past 50% of my take profit level, I tend to, depending on my day's activities or my account balance, I tend to move my stop loss to either break even or sometimes even close the trade, partially close it, or even close, depending on how much I have made. Okay, and this comes with experience, but it's called trade management and risk management. So in this case, you'd see that trade went into profit when it opened and went all the way to 49 pips, again, not under 50 pips. So I'll call it a loss. It's just about 50 pips. To be honest, I'm not going to count it 50 pips. Okay, let's go to close 43 pips. But it went down to 50 pips, right? Now, I will call that a loss still. If it had gone past 50 pips, then I could have moved my stop loss or taken partial profit. But again, my rule is I let it go past 50% of the trade, which in this case it was, but it's just on the borderline. Again, let me zoom in a bit so you can see that I'm not trying to. Yeah, so just under 50 pips. It will be just under 50 pips. So I'll call it under 50 pips. So that was a loss. Okay, so we'll move on. So that's a loss. We'll call it a loss. Then we had another trigger the next day, and that hit stop take profit. That was 100 pips, so not bad. So that's January. We're moving on. Okay, so January is a good month. So let me just sort of summarize it a bit. January, we've got, and again, I'm recording this today, the 17th of May at 2:29 UK time, British time. So you can see that it's sort of quite up to date. So for January, we've got to 250 pips so far. Yeah, 150 pips so far. That's not bad. So we've had what, 350 pips? No, 250 pips, if I'm right, in December. We've had 250 pips in December, and we've had 150 pips in January. So that's not bad. Okay, so we had another trigger that went straight into stop loss, hit stop loss. So that's, I'll say, a loss. But then we had a sell that went and hit take profit. So again, clean, no drawdown, straight into stop. That's quite nice. To hit TP. Next trigger was again February 24th, sell signal, hit stop loss. So that was a loss. Again, we had a sell again the next day and had hit TP. So seem to have a bit of a pattern, isn't it? When it goes against it, the next sort of day comes and tries to get it back. So that's not bad at all. Again, this is not financial advice in any way. This is just for educational purposes. So this is just so that you know how the signal is working. And again, if you want to subscribe, you can subscribe on Trading View. Now, so this again, we had a buy signal, but I got hit stop loss. Then we had another buy signal again, and then hit TP. So again, minus, and it fights it back, and then it basically, well, not so fights it back, but again, it triggers another one. Don't like to fight the market, because you tend to lose, end up with bruises. So it's not worth it. So yeah, there we go. So that was a good month in last March. Okay, so I'll go over it later anyway. So let's move on. Next one, we have another trigger, not for a while. Again, if you're a swing trader, that's good. and then we had another buy signal on the 13th of March. Again, drawdown throughout, stop loss hit, no problem. We move on to March the 8th, the 19th, another trader came, boom, hit TP. So lost 50 pips, made the 50 pips back and some. Right, okay, so we have another signal, a buy signal. Now this is where I was on about the three trades that I would not call a loss necessarily if I was trading it. Now, if you see here, now the trigger was on the 30th of March, went to drawdown, went to profit, right? 89 or 86.9 pips in profit. Now, if you traded a lot, one lot, that's $10 per pips, sorry, per pip. So you go into profit, 86.9 pips, that's $869, right, in profit. Now you tell me, when you're trading that in real money, your hard-earned cash, you're trading that and you see $869 in profit. How do you feel if you just sat in and watched it and it went all the way back down and hit stop loss and you lost $500 of your money? So now you haven't gained 89, you've lost $500. Now that is not good risk trade management, and neither is it the risk management. So what I would do, as I said earlier on, I move my stop loss when it's over 50 pips in profit. So over 50% of my take profit. In this case, it goes past 50, about there, give or take. So yeah, 50, 49, 50, yeah. So it goes past this level. Then I would move my stop loss to either break even, trail it on the trail the stop loss. That's another thing altogether called trailing stop loss. Set it up. I'll put a video together at some point to teach you what that means, how to set a trailing stop loss, and it follows your profit. Now, that's or move your stop loss manually to break even. I would say +1, so it covers the fees and yeah, or close the trade in profit. Depends on how much you've made for the day or the week before the previous trades. Now you protect your capital, or the profit that the market's given to you, you don't give it back. So in this case, you've been given $869 using one pip, or if you're trading one lot, if you're trading two lots, that's about 1,700. You've seen that go into profit, and then you sit down and do nothing about it, goes into a loss. I would not personally call it a loss because I would not trade it like that. So, but for the purpose of this video, I will call it a loss. Okay, so that's a minus 50 pip loss. Let's move on, and we move on to, this is April now. And again, this is similar to the previous trade. We had a sell trigger, went to a drawdown, went all the way 68 pips. That's $684 if you were trading one lot. If you're trading 10 lots, that would be $6,800 in profit. Right? If you're trading 0.1 lot, that would be $68, depending on your capital or your risk. But again, this is what I mean. Goes into profit. Over 50%, I don't call it a loss. If it's done over 50%, that's a 1-to-1, which is basically how much you're willing to lose. You made it here. I will protect my capital at all costs. So let's assume it went to 60. Now you did nothing with it. You did not close it. That's bad risk management or trade management. Goes all the way back and then hit stop loss. Now you lose $500. That's a loss. So I said I would not treat it like that. Again, I'm experienced. So we'll call it a loss on 50 pips for the purpose of this video. Move on to the next signal. Again, we had a buy that went straight into TP. Nice trade, no drawdown, beautiful. Now we had another trade, a signal. I know. Yep, we had two signals that came in, and this went straight down, hit stop loss, went straight through it. Hit stop loss, two stop losses there. But again, we had a buy signal that almost almost kissed stop loss. Honestly, nearly kissed it right there, almost kissed it right there. You see it, kissed it, and and it did not hit stop loss, went back straight into profit, 100 pips there. So we lost it here, 2 straight losses, but we gained it back. So that was in early May, and then we had another sell signal on the 5th of May. Went to a drawdown, straight down, TP hit, nice clean shot, and we've had another loss here, which is the 12th of May. Went into a drawdown again. This went 55 pips in profit. This again, same thing here, 55 pips in profit. 50 pips, really and truly, you want to move your stop loss, or trail it, or close partially, or close it all, depending on how much again you've made, and protect your capital. You move your stop loss, break even. Now, if it goes against you here, it stops you up. Okay, so that's how I trade it. Okay, so we'll call it a loss again for the purpose of the video, but again, I will challenge that and say I would not lose that trade. And this one here, clean, again, a loss. Okay, so we have to be fair here and call this a loss because it did not hit 50%. That's 82 pips. 50% is about there. Okay, so it did not quite hit it. So yeah, so in total, if I've calculated already, we've had 12 gains and 12 losses. I'm going to quickly run it through. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Right, so we had 12 so far since December the 1st. And today is the 17th of May. So in the last 6 months, give or take. So 12 losses, and I know we've had 12 gains. So we've had 1, 2, just for transparency, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 2 losses. Right, it's a weekend today, so waiting for the market to open soon. So yeah, so 12 of each, and which means that the 12 losses times 50 will be minus 600 pips. Change that to red. And the gains, the 12 gains, would be plus 1200 pips. Change that to blue. So net would be, guess it, what do you think it is? Plus 600 pips today. And I'll change that to green so that we can tell it's the difference. So I'll change that to green here. Right, cool. So far with the signal, we've had 12 losses, 12 wins, but because this is a 2-to-1 on the GJ, which is Japanese pound against Japanese yen, we are 600 pips up from the 1st of December till the 17th of May. So thank you very much again. If you'd like to subscribe, like, and share, that'd be great because I'm new to YouTube and I'm getting used to this. So help me get some more videos out there and help educate more people, learn how to trade properly and transparently. Okay, I'd like to leave you guys with it. Thank you very much. See you all.